Hello, hello, hello. Good evening, Ashwin. Good evening, everybody.
Hi, Yash. Good evening, and after the New Year, so a very happy New Year to everybody as well. Even though it's illegal to, I'll still dare to happy. Yeah, this is
Uh,
our first New Year.
I think, Ashwin, there is some issue with your audio. We can't hear you clearly. Gautam, meanwhile, is in. Gautam, can you unmute yourself and give us a mic check?
Check, check, check. Am I reasonably audible right now?
Yes. Gautam, can you hear us?
Yes. Yes. Good evening, Yash, Ashwin. Hi. Can you hear me clearly?
Absolutely loud and clear. So,
Perfect.
Loud and clear. Awesome. So let's get the conversation going. Guys, as you all know, today's guest for the Twitter Spaces session is Gautam Shah, a very big voice amongst the market community. But for those who are uninitiated, just to give you guys a quick intro, Gautam has been in the markets for over 20 years before starting off his own firm, Goldilocks Premium Research, where he's the founder and chief strategist. He worked as the director and Chief Technical Analyst at JM Financial for over 15 years. Speaking of Goldilocks Premium Research, it has won the Global Technical Analyst Award for the last 3 consecutive years. It's an achievement in itself. And Gautam, congratulations. Like you said in your Twitter post as well, that this is the first time you are doing a Twitter Spaces session. So I'm really happy and excited to have you.
Thank you, Yash. Thanks for the lovely introduction.
I'll
Pleasure.
need to quickly ask you. Tell us about the name. I mean, why choose Goldilocks as a name? What's the funda there?
Yeah, so it's actually quite interesting because when I used to write reports at JM, people used to love my titles a lot. I was known as a title man at my
Okay.
work. So when I started my own firm, I thought there has to be an interesting title, and Goldilocks means to be at the right place at the right time. For example, the Earth is in a Goldilocks position. It's not too far from the sun, and it's not too away, and that's why life exists. So I think I just thought that it was absolutely apt, and that's what we do in our research as well.
I don't know. It's also a nice way to make sure that people definitely ask you this particular question to get more interest as to who are these guys? What do you guys do? So I think yeah, good strategy. I like
Thanks, yeah.
it. Chal, Yash, over to you.
Gautam, 2022 was nothing short of a roller coaster ride for equity markets. How are you looking at the new year? Are you of the camp that it will again be another volatile year for markets, or are you more optimistic?
Well, I'm not very sure why people got uncomfortable with 2022 because I think for anything that happens in the markets, there is a logic, there is a reason. And I think we saw one of the cleanest bull markets India had ever seen in the period of 2020 and 2021, where we just climbed a wall of worry. You had a rally from 7,500 to 18,600 without a 10% correction. Now, this is something that has not happened in 20 years. Since the time I got into the markets, we haven't seen something like this. So, whenever the market gives you too much very quickly and very easily, it will ensure that to balance things out, it will do something difficult. So, I think what happened in 2022 was just that it was unplayable. It was extremely volatile. It was all over the place. And, the market's job was to trap market participants both on the way up and on the way down. But the way we saw it, it was just healthy consolidation because the index did not lose too much ground. It lost about 17-18% from the highs, whereas world markets were down anywhere between 20 to 45%. So, in that context, India stood out really well. But the real damage was in the mid caps and small caps. So, I just thought 2022 was a digestion or a retracement in technical terms of what happened in the prior 2 years. Now, as we got into 2023, there was a lot of optimism because we had made new highs. We had got past 18,600. But what made me very uncomfortable and what discouraged me was the fact that there was no follow up. If the move past 18,600 was a genuine breakout, the market should not have behaved the way it has in the last 6 weeks. And that's probably the reason, as we started the new year, we started getting cautious. And there were just too many technical triggers on the charts which suggested that this is not a plain vanilla correction because mid caps already corrected a lot in December. Large caps have been doing it in the last 10 to 15 days. So I think we are in an environment where we need more price and time consolidation. I think most of the positives that have been there for the last couple of years are pretty much in the price. And I find it very funny when people talk about India's decade and things like that, when the world is changing every 3 6 months. You can't look into the future beyond a year in today's times. So as a technician, I want to take it one step at a time. And I do
Hmm.
believe that 2023 is going to be challenging. We are not going to make new highs in a hurry. I think 18 and a half, 19,000 is pretty much looking like a ceiling, at least for now, given the evidence. And something around 16, 16 and a half is a sort of a base. So I think we'll just be oscillating in this range, at least for the first quarter of this year, and then we take it as it comes.
Got it. But have you come out with any reports with your full year target for Nifty in case you have?
See, I think we came out with a cautious stance, as I said, in the middle of
Mhm.
December when the Nifty got back below 18,400. And we started believing that maybe getting past 18,900 might not be so easy. Given that view, I think if you look at what has happened in the last 2.5 weeks, it's just been a pendulum. It's been a seesaw between 17,800 and 18,300. And if 17,800 does break on the downside, which I'm pretty sure every person in the country is now watching, I think then you are in for free fall mode. And that free fall could mean 1,000 point fall, could mean a 1,500 point fall, maybe as low as even 16,000, 16,200. So I think that's the kind of number I'm working with. It's not a forecast really, because I think the confirmations still have to come. But the evidence on the table, for the first time in 2 years, you are seeing disruption on the weekly and on the monthly charts. I can give you 5 or 6 technical evidences if you want. So all those disruptions have made us very uncomfortable.
All right. So Gautam, if the outlook isn't that great, and most of the experts, even the fundamental guys, fund managers, and mutual fund CEOs that we've interviewed are saying that the first 6 months of the year don't look that good. In that case, would it make more sense to diversify beyond equity? And in that case, do you like perhaps gold or silver and maybe even crypto, looking at their recent moves?
The problem is consensus opinion is usually behind the curve. It's not ahead of the curve. And just
Mhm.
because markets have behaved this way in the last 6 to 8 weeks, you have consensus opinion that it's going to be difficult. Believe me, if over the next 15, 20 days, markets turn around, the budget is great, the talking point will change completely. So I think equities, you can't go 100% cash. You can't just overnight go do 0 and 100 and back to 0. I think that's not practical. Maybe the smaller traders can do it. But I think the opportunities are there in select pockets. So the idea is to stay low on leverage, stay low on trading positions, but stay topped up in your investment positions. If you're in the right stocks, you'll do well. I mean, a great example being L&T. Today it's at a lifetime high. And if you've heard me in any of my business channel conversation over the last 1 year, it's been our poster boy stock among the large caps. And I think there's a lot more to go. So while equities, you have to be extremely choosy. I do believe that gold and silver is the opportunity of 2023. I think I've maintained this view for the last 6 8 months. And the breakouts that we've seen over the last 2 3 weeks tells me that this year, hopefully at some point of time, gold will cross lifetime highs, go past 2070, and you should see silver getting past $30. So yeah, there is a big opportunity there, but then your portfolios need to be 10 15% topped up there, and balance. You trade in equities, be in the safer names, rush or go into value. The last couple of years was all about growth stocks doing well. But I think there has been a gradual shift in the last few months wherein market is respecting value and not giving importance to growth. And we've seen what's happened to the Bajaj Finance, Finservs of the world. We've seen what
Yes.
happens to the Jubilant Foods and the Loris Labs and even the Asian Paints of the world. So clearly, I think value is coming back and growth is taking a backseat.
Absolutely. Long list of stocks which have got hammered. You can include perhaps a DMart in that as well. 5% down after their Q3 results also. Gautam, I'll stick with
Indeed,
commodities
indeed.
for a bit. Most experts are saying or forecasting that oil prices would tend higher in 2023. I think there was a Bank of America Merrill Lynch report that said that average oil prices could be around $100 per barrel in 2023. Now, we all know that oil prices are a net negative for India because of our high import dependence. What do you make of that?
Yeah, I think it based out at 70, $72 on the NYMEX. I think the last couple of weeks was that basing out, and it seems that it's ready for a rally, but I don't really see a trend. The problem with oil is that when it goes down too much, it's a problem. When it goes up too much, it's a problem. The best position for India is when oil just stabilizes in a sort of a band at slightly lower levels. So
Right.
short term, there could be a rally towards 1995, but I don't see anything beyond that. So I would say broadly 70 to 95 is the kind of range in which oil is likely to remain. But as I said, I don't have a similar view for precious metals because there I think a tearaway rally is likely to play out for months to come.
Got it.
Awesome.
Ashwin?
Gautam, just quickly your attention on the big news, the most interesting news for the day, and that is moving into the T+1 settlement. And I think that's pretty significant because I think it's 18, 19 years. I mean, correct me, Yash, on this. I think we were T+3, it became T+2, I think, in the early part of this last decade, if I'm not mistaken. And of course, moving into a T+1 in about 10 days' time. What do you think of this move, Gautam?
Well, what do I say? I have seen Badla in my life. I have lived the 2000, 2003 period when we used to have this Badla trading, which was so popular. And because I come from Calcutta, I've worked at the stock exchanges here and see people go mad with this kind of a trading. So from there to transition into T+1, just tells you, how far in India is reached. So I think it's phenomenal. It's a step in the right direction. It's just that our youngsters need to be on the right direction as well, which I think is a bit of a problem given the way social media behaves this way, the YouTube channels. So that I think needs to taken care of because many of today's millennials haven't seen 2008, they haven't seen 2002, 2003. And having seen that, it makes me very uncomfortable. If something like that plays out, how are you going to handle markets?
So just let's stay with us for a moment longer, please. How do you think the behavior of trading itself changes when you move in from a T+3 to T+2 to a T+1? Do you think it makes people more reckless?
Well, people have already been very, very reckless. I think we see that all over the place. I think it's going to get much more faster. Obviously, it's going to be much more reckless, but I don't think it's going to impact price action as much. It's just ease of doing business. I don't think price action gets impacted so much.
Got it. Cool. Thanks for those insights, Gautam. Yash?
Ashwin, when you said people get reckless, the first thing that I could recollect is Dave Portnoy picking out alphabets from his cloth and just buying any stock during the 2020 COVID time. Now I know Gautam will hate me because he's like, I look at charts, I don't care about what the company does.
No, Yash, I do. I think that's the forte of Goldilocks. Because when in my earlier job, I was just a charts person. If a grade D company also had a great chart, we used to recommend it. But when I started Goldilocks, I was very, very clear that we will look at technicals, we will filter it with fundamentals, and we'll also see that the big boys and the smart money are in it. And that's what our forte is, and that's what we've been doing for the last 3 years. So, not a single recommendation coming out of Goldilocks will be a company with bad earnings.
So on that note, Gautam, I'd like your thoughts on the mid cap and small cap space. I think a couple of days back we had the mutual fund data also come out, and we've seen that the mid and small cap space have received the maximum inflows from retail investors. How are you playing this team?
It's quite a disconnect as we speak today because we saw that free fall happening in the month of December where everything got decimated in the mid caps basket. I mean, a 33,000 index on the NSE mid cap index became 30,000 in a matter of 7 days. 10% down in 7 days. And thereafter, we saw this recovery, but we've been sideways for the last 7 to 8 days. But to be honest, I'm a little uncomfortable because right now there is this big disconnect wherein large caps are correcting, the index is correcting. But if you look at the Nifty Next 50, look at the mid cap index, look at the small cap index, or look at the NSE 500 index, they have not been correcting in the last 10, 15 days. So I do believe that quality mid caps will come under pressure if the Nifty were to break 17,800 at some point of time. And grade C and grade D mid caps and small caps have already corrected in the last 1 year. I can give you a long list of stocks which are trading at 52-week lows or close to 52-week lows. So quality mid caps which have actually stood out will come under pressure. So I don't think there should be a rush to buy in at these prices. let the budget play out, let the earning season, get over. And after the kind of fall that you saw in December, you just want to be a little careful. SIPs, please stay with it. The India story does not change. As a long-term investment option, I think it's great. And as an SIP investor, you should be happy that over the next 6 months markets fall so that you get entries at better levels. But from a short-term perspective, medium-term perspective, I think mid caps and small caps are not the place to hide at this point.
Wow. Okay. Yash, check.
Yeah,
I,
I think Ashwin, you are next.
am I audible right now?
Yes,
Yes.
yes, you are.
I think. Just staying on the the stocks topic itself. New age stocks, Gautam, e-commerce stocks. What's your opinion on this space? They not seem to be getting too much love nowadays.
Yeah, I think so. And I think, I'm a chartist who likes data. So anything that's recently listed or which has data of the last 1, 2, 2.5 years, 3 years, and if you really look at e-commerce, even stocks which have seen some data, they haven't really done so well. So I'm not a big fan of them. I think many have disappointed. 80-90% of these new listings, if you're referring to new listings of the last couple of years, have really disappointed. I mean, the Nikas and the Zomatos of the world, and so many names I can give you. But if you're talking about IT as a basket, if you're talking about e-commerce meaning IT, I think I think that's one place where you could hide because it's coming out of a very large correction of the last 1 year. I think most stocks are down 40-50%. A Wipro is down 50% from the highs. And I
Mm-hmm.
think they've based out really well over the last few weeks. So if you want to really park your money in some solid names, and in case my view on the markets ends up being right, I think you want to be invested in the TCS of the world, the Infosys of the world, the Persistence of the world, the Science of the world, and maybe the Coforge of the world. So IT is a basket which I actually like at these levels, and I think one can hide into it.
Gotcha. Thanks for that recommendation for our audiences. Yash, you want to take the next one?
Yeah. Gautam, we discussed about how DMart was one of the stocks that got beaten up. Uh, let's look at overall the FMCG space. Again, we have lots of BAP stocks over there, buy at any price kind of names. Uh, is there any specific pocket from the wider consumption space that you like?
Well, I think BAP is gone. To be honest, I'm not a big fan of BAP anymore. I'm the kind of person who swings with the market action. So I don't have a bias. When BAP works, I go into BAP. When it doesn't work, I stay away from it. And I think that's what I've noticed over the last many months, that I think the market is just now clever enough to understand that you can't have this greater fool's theory going on and on and on at any PE whatsoever. And I think the charts understand that very well. So FMCG as a basket, if you really take aside ITC, the FMCG index might be down 15% from where it is currently. It's just that ITC, which has such a large weightage, it's been holding the entire FMCG index up. Aside of that, there is nothing that has done well. Lever has been sideways, Daburs, the Maricos, the Godrej Consumers, the United Spirits of the world, all been very, very weak. In fact, even a Nestle. So I don't see great upside for FMCG. The index is currently at about 44,500. I think there is downside potential of about 10%. We like ITC though. I think it's part of our long-term picks. So if you get a 5, 7, 10% kind of a dip in ITC because of the overall market weakness, definitely top up on ITC. It's a great place to hide for the next 1.5 years, irrespective of what the market does. But aside of that, everything else in FMCG is quite negative. And the entire consumption theme, as you highlighted, I think they've all gone. They've just got disrupted. They're very
Yeah.
weak. And the problem with many of these consumption stocks is that there's so much room to fall. Everybody's comparing how much stocks have fallen from the highs. Nobody's comparing how much these stocks have rallied from the 7,500 lows of March 2020. And if you do a simple retracement of that, you will see that many stocks have not even done a 25-30% retracement of that 2 year rally. So the problem is there is a lot of scope for many of these high flyer stocks to fall. And that's exactly what has happened to a Jubilant Foods and a Loris Labs.
Gautam, I want to quickly ask you to comment on how are you looking at the healthcare space? Is that something that you would have a positive bias over the next, let's say, perhaps 12 to 18 months?
See, I want to have a positive bias there. And if my cautious stroke bearish view on the Nifty actually plays out, then traditionally money has always, smart money has always moved into pharma. But the problem is in the last 5 months, every time the pharma index has tried to attempt, it's failed. And apart from a handful of stocks, maybe a Cipla, a Sun Pharma, nothing has worked. I mean, we've all seen what an Oro Pharma has done, a Lupin has done. I think those are crazy declines that we've witnessed over the last 6 months. So I would be very selective there. I think a DVs could possibly be bottoming out, a Zydus Life could be bottoming out.
Mhm.
I want some evidence on the table to say that you need to hide into pharma. For the last 1.5 years, the index has been in a downtrend. So I don't think one should be cute enough to just go out and buy just because it's underperformed so far. This underperformance can continue over the next many months as well. So in terms of numbers, I want the pharma index to get past 13,200. As a technician, I love numbers, so I want 13,200 to be taken out. If that happens, I would look at the outperformers. So the 2, 3, 4 names which I just gave out, I would look at them because I think the risk reward is getting better for pharma, just waiting for that clarity on the charts.
Got it. Thanks for that insight there, Gautam. Yash?
Gaurav, moving from the underperforming names to the outperforming ones, banking and financial stocks, they are absolutely killing it at the moment. How do you view this space?
Not anymore, Yash. I think we piggybacked on the banking index the last 6 months, and the banks were the reason why the Nifty got to 18,900. We had a fabulous rally. Private banks, PSU banks. In fact, private banks, ICICI Bank has been our favorite for the last couple of years. But given the action of the last 3 weeks, I just feel that they are extremely overdone, overowned, overexposed. And I think there is just too much dependency on this entire banking and financial space. And I think there is room for a lot more downside. And if the Nifty has to break 17,800 at some point of time, it will be led by banking stocks. Because the problem is the market has lost leadership. Reliance has lost its way. IT is a defensive name. It can do well, but it cannot lead any rally from here. And banks, 41,700, 42,000 is such a big support. We've respected this number for the last 7 to 10 days. If this breaks, I think the bank Nifty is losing 2,000 to 2,500. So that's a big fall, maybe even more. That's a very base case target on the downside. So I would be very cautious in banks overall. In fact, some of these private banks, which were the poster boys of the last 2 years, have seemed to have gone through some sort of a distribution in the recent past. And what I hear from a fundamental analyst is that a lot of the positives on which they were riding are now in the price. In fact, the next 6 months, on account of what happens to interest rates, I think banks might just be on the receiving side. So I'm not a big fan. They are high beta. We've seen the correction in the last 6 weeks. 41,700 is the line in the sand. If that goes, then I think you stay underweight banks.
All right, so that's a
I
contra
think
view
we
coming in from
have a couple of
Gautam.
questions.
Go
Sure.
ahead, Ashwin.
I think, do we have some time for maybe perhaps a couple of questions from people who have plugged in? I think we have a couple of minutes that we can definitely push in. So if any
Yeah,
of you have anything that
yeah. Anyone who has a question, please drop in the comment section, or you can message both me and Ashwin, and we'll try and take them in the live conversation itself. While we
yeah, just
populate the
a
questions,
caveat
Gautam, I
though
have
that
one more question. Ashwin, that seems to be
I
something
think the
really wrong
lags
with
are
your audio.
horrible today. No, no, you go ahead and you give me an over and out, and I will start after that because there is huge lag. So over to you, Yash.
Gautam, I have one question, one last from my side before we take any of the audience questions. Uh, Construction and infrastructure is one space which will be in focus in this year's budget. Now, there are multiple ways of playing it through cement, real estate, capital goods. Uh, how are you looking at this whole theme?
Yeah, sure. We discussed what to avoid, but I think we did not discuss what to really look at from a 2023 perspective. And I think infra, capital goods, cement is clearly the space to be in. I think they have shown relative outperformance in the last 1.5 months. Most of the top stocks have done exceedingly well. So I think this is a theme which is here to stay. Now, I would want to play this theme from a 2 to 3 year perspective because I see that visibility on the monthly charts, because these are some of the breakouts which have taken place after 5, 7, 10 years of consolidation. So that's not going to end in a hurry. It's just that the market weakness will lead to a lot more speed breakers, and therefore you will get dips to top up. So use all market related dips to top up on infra, capital goods, cement. I think that's a basket that will do exceedingly well over the next 6, 12, 18 months. And I would also want to add to this the PSU theme. I spoke about value. I think the PSU
Mm.
index got to that 4,500 number and is just resting there. Market corrections are not having an impact. So I think the PSU theme will take center stage this year. And I see a lot of these top stocks, whether it's the Coal Indias of the world, the ONGCs, the Oil Indias, the NTPC, the power grids of the world. I think all of them should do really, really well. So again, if you're booking profits or if you're reducing your positions in high beta sectors, say banks, say metals, even to a certain extent FMCG, you want to go into PSC, capital goods, infrastructure, IT, and auto ancillary.
Awesome. Ashwin, we've got tons of comments ever
We've
since
got
we've
lots of
opened the floor.
questions. Yep. Let's. Okay, I've got Ravi Chandran who's asked us a direct question, and I think I like his question. He just wants you to tell us, Gautam, outperforming and underperforming sectors for the next 2 quarters. And just a small addendum. Please refrain from asking us very company-specific information and keep it to sectors and comments on a larger theme, so that it's going to help a larger, a greater number of people. So, question from Ravi Chandran and Gautam, over to you. Outperforming and underperforming sectors for the next 2 quarters.
So underperforming, I think I spoke about a whole host of names. So it starts with banks,
Mm.
which I think could be the driver on the downside. So you don't want to get stuck in between. FMCG, apart from ITC, I think everything else in that pack looks not so great. Auto, metals, pharma, consumption, chemicals. So I see this entire basket underperforming for the next couple of quarters. But I think I would want to review it every 45 days, because as I said, India and the world is changing every couple of months, and you want to stay aligned. But at this point, given the evidence on the table, these are the sectors I would want to avoid. The ones I want to be into, which I feel will outperform, I said earlier, PSC, the PSU index, capital goods, infrastructure, IT, and auto ancillary to a certain extent. Even smaller themes like fertilizer, I think, can do exceedingly well if you take a 1 year view.
Thanks, Gautam. And we've had a view on PSUs. Kushal has asked us, and you just gave us a PSU view. Arun is commenting, Arun Pilania. And Arun says, last 1 month, we have seen an insane whipsaw in the market. Will it continue till the budget or even after that as well? What's your perspective on this, Gautam?
See, as a technician who's been practicing this for the last 20 years, whenever markets get into whipsaw mode, it only means that it's trying to do something big. It's preparing for something big. I think that's exactly what happened in 2020 as well. And we saw the fall and the rise thereafter. So, whipsaws is the nature of the game. If it happens, you need to have your numbers correct. And I think if you look at the last 15, 20 days, the numbers have been very correct. Now, if you look at the last one and a half months, the bar quality, has really been not up to the mark. And that's the reason we say that this is not a plain vanilla correction. So if you have your numbers correct, you don't want to stand in between while the bulls and bears are battling it out. This is what I call a transition phase. And in the transition phases in the markets are the most difficult phases. So you don't want to make money every day. Let the trend emerge. Let the market either break 17,800 or get past 18,250, 300. Once that happens, you're going to see 1,000 point move, in that direction. Play those trends. Why get in between these whipsaws, which are a foundation to a large move?
Noted. Gautam, a lot of people in the comment section want to know your thoughts on the insurance sector. I know, again, a bit of a budget play over here. Some media reports claiming that we might have additional incentives for investments in insurance products. Do you like this space, and any top picks that you'd like to share?
See, I think it's turning the corner. To be honest, I have been a big bull on insurance for the last 3 or 4 years. And then COVID hit us. And when COVID hit us, insurance took a backseat because suddenly people realized that this is a black swan that has really impacted the insurance sector deeply. And that's probably the reason for a couple of years, insurance stocks didn't do well. But as a theme, if you look at it as a 5 year, 10 year theme, I think these are levels to accumulate. If you look at 3 months, 6 months, maybe it might not deliver. But if you have a 3 year, 5 year, 10 year kind of a view, please go ahead and buy insurance. It could be something in life, it could be an HDFC Life, it could be something in non-life, it could be an ICICI Lombard. So there are some selected names, that you can look at, but please play the bigger picture. Don't look at day to day or week to week gains, because it seems as if they are just basing out and trying to get into an uptrend.
Got it. Gautam, a lot of trend following people would be looking at the Nifty Metals Index being at an all-time high. Um, do you see metal stocks outperforming? I think we didn't discuss metals in particular. We spoke about precious metals, but not the metal counters.
If you look at the metals index, you'll be amazed to know that the metals index had tested a level of 6800 in April 22. It fell all the way down to 4500 in June 22, and now it's back at 6800. So, and for the last 1.5 months, it's been finding resistance in this 6800, 6900 area. The problem is you can't have a bearish view on India, on Nifty and stocks in general, and you can't be bullish on metals. So I think that if 17800 breaks at some point of time, then even metal stocks will correct. So these are not levels to clearly add to your positions, because these are very, very high beta. And I think many of these metal stocks have run up a lot, so the upside potential is very, very less. So in terms of numbers, 6500 for me is the line in the sand for the metals index. Maybe hold your trading positions with a trailing stop loss, because this is the only index. 6500 breaks, I think you could see a large dip there.
Gautam, we have Pivot Minati who's asked us, and this was something that Yash and I also wanted to talk to you about. Green and EV, your note on the sector for the next, perhaps, say, 18-24 month time period?
You know what? Markets discount things so fast. I remember 15 years back when you used to look at themes, the market discounted it over 12 months, 18 months. These days, any new theme comes up and the market discounts it over 3 months. I think the best example is what happened during the COVID period, because the market knew that the economy is going to revive and the world will survive. But we were all scared. We never believed that the Nifty can go up from 7.5 to whatever, 15, 18,000. So this EV theme was a little overdone, I think, last year, because everybody thought that this is a story of the next decade. Yes, it did well for a bit. And thereafter, because it was overowned, I thought you saw this large correction. But EV is a theme which is here to stay. Now, don't play it short term, medium term, play it long term. Identify some of these auto ancillary stocks, and go and invest in them from a 3 to 5 year perspective. You'll do exceedingly well. But if you look at returns month on month, I don't think EV is going to do as well.
Okay, got that. EV for long on it, sir. I think, do we have anything more? I'm going to quickly scan in. Yash, do you have some question that you want to bubble up to Gautam?
Yeah, I mean, I wanted actually Gautam's thoughts on the energy space in general, because while everyone is talking about green energy and renewable energy, it was actually Coal India which was the top performer on Nifty last year, uh, at least in the top three, if I'm not wrong.
Yeah, so Coal India also happens to be the top name in the PSU index. So I think I
Mm.
absolutely love it. There is a dividend yield angle to it, and there is also this under ownership, I would want to say, in Coal India, and it's making up for lost ground. So I think it's probably one of the better bets for 2023 as well. We love the chart setup. We have it in our long-term picks. It's seen a bit of a correction from the recent highs. I think the area around 200, 215 is a great support. So go out there and invest in this stock and the sector. I think it will do well. But when you talk about energy, you can't not talk about Reliance Industries. It's 10, 11%
Yeah.
of the energy index, and of the larger of the energy index and of the Nifty. And it's one stock which makes me very uncomfortable, because throughout the last 1 year, we thought that, okay, Reliance is consolidating. Now the takeaways on the charts is that maybe Reliance is distributing. And if this stock, goes back down to the lower end of the range, which is 2300, and then breaks down, then it will take the entire market down with it. So Reliance is one place where, because every individual I speak to has some exposure to Reliance. So maybe you want to, go underweight this stock and look at some other pockets in the market which I highlighted.
Got it.
Gautam, last question from the comment section. Vipin wants to know your thoughts on the real estate sector.
Well, Yes, I've been a big bull on real estate, and that's been the view for the last 18 months actually. I still feel that it will do well, but just like metals, the problem is you can't have a bullish view on real estate and a cautious stroke negative view on the Nifty. So if the Nifty were to follow the path which I am putting out, then I think real estate will underperform to a certain
Yash, are we
extent.
still connected?
Am I audible?
Yeah, yeah, Gautam. Go ahead.
Yeah, yeah. So I was saying that real estate, if the Nifty stays, under pressure, then I think real estate from a 3 to 6 month perspective might not see great returns. But even in the real estate index, you are seeing disconnected activity. On one hand, you have a DLF which is standing out beautifully. On the other hand, you have a Godrej Properties, which has really gone down significantly, and it's happening in every sector. In the last 6 to 8 months. So real estate again as a 2 to 3 year story, use the current market decline to top up in quality stocks. But again, if you're looking at trading returns, I think that's not happening till the Nifty does not get past 18,300.
Got it. Gautam, I think we've completely run out of all the questions and even the time that we had booked you for. That was a really engaging session with lots and lots of learnings. Really thank you and really appreciate the fact that you agreed to do this and this was your first time ever doing a Twitter Spaces session. In case any one of you guys who've joined probably late, you can go back and listen to this full conversation. It will be the first pinned post on our Twitter handle, and you can hear about Gautam's view on various sectors, market, and stocks as well. And while you're there, do go ahead and check out our Daily Rip India newsletter and follow us for more amazing market content.
I happen to be an analytics guy on Twitter numbers, and this is one of our biggest sessions so far. So thank you, Gautam. This is fantastic.
Thanks, man. Great to hear that.
Lovely. You guys have a great day. And again, on behalf of StockTwits India and Business Insider India, have a lovely evening, and we'll be back with you next week, same time, Yash and myself.
Thanks. Bye.
Thank you, guys. Bye.